All right, welcome to the Elevate Your Equity podcast, where investors, with a special emphasis on couples, begin, continue, and deepen their journey to financial freedom together using the powerful vehicle of real estate investing to do it. And today we have a fantastic guest, Mr. Ruben Dominguez. He's a real estate investor and former operational executive with proven track record on repositioning real estate assets, delivering quality tenant experience, and obtaining consistent returns to his partners. He began investing in real estate back in 2012 and has acquired a substantial portfolio of single family and multifamily assets that have continually produced double-digit returns for his investors. And prior to real estate investing, he was an operational executive as a software as a service company headquartered in San Antonio, which had 50% year-over-year growth and a successful exit in 2018. And he's also the founder of Totem Capital Group, which manages all aspects of acquisition, repositioning, and sales of single-family and multifamily properties in Texas. And they completed over 50 renovation projects since 2012. Those projects had budgets ranging from $10,000 to over $1.2 million. They currently have interest in over 500 units in Texas, valued at over $40 million. So we have a powerhouse on the show today, but also what I really liked about this show is how relatable Ruben was. Started off as a W-2 employee, started doing, flipping houses and doing burrs on the side before it became even mainstream, and just really kind of took off with it and ran with it and ended up now doing syndications about 5 years later.
I agree. And Ruben was such a breath of fresh air. He's, like you said, so relatable, so grounded, and just a wonderful story to listen to. Especially what the most inspiring part for me was how he gives back. After achieving all the success, how he is using his free time to give back to people in need. And what really struck out for me was how he's doing it with his wife, and how his wife was the one who propelled this whole journey. So it's definitely worth a listen to.
Yeah, absolutely. I think that you guys are going to take away so much from this, even if it's just listening to the story and trying to put yourself in his shoes. I think that you guys are really going to take away a lot of great information from this. So without further ado, let's go ahead and bring him on. All right. And here we are with Ruben. How are you, Ruben?
I'm good. How are you?
Fantastic.
Good, doing well.
Yeah.
Awesome. Thanks so much for having me on. I'm honored to be on your podcast.
Likewise, the honor is ours. We really appreciate it. Thank you for coming on. So usually when we start out these podcasts, we want to talk about how you got started investing in real estate and where you are right now. So maybe you can start there.
Sure. So I was in the corporate world for many years. I was in IT, and I, worked my way up through the corporate ladder, getting that next promotion. And I thought that was my thing. I had always had a little bit of entrepreneurial spirit, and I had looked at some things, and I looked at, starting a franchise or maybe starting my own lawn care business, all kinds of stuff. And nothing really was my passion. Like I couldn't find something that I really like that. Yeah, I can take the risk and go out and try to start this business. So I kind of gave up and just did my corporate thing. I said, if I work really hard in the corporate world, I can make it to, be an executive or a CEO. And so I did all that stuff, and I found that I was working, 60 to 80 hours a week. And the more money I made, the more time that it took out of my day. And I started having kids. So I'm married, I have 3 little kids, and I started I come home from work, and my wife would tell me, oh, look at all the cool stuff our son did today. And I would like, man, I missed that. And it would be cool if I could be home to see some of that stuff. And I started searching, and my wife had always said, hey, we should rent houses. She even bought the book called Real Estate Investing for Dummies. Those yellow books? Yeah. She bought that book, and she's like, hey, read this. And I read a little bit of it, and I was like, I don't know if that's the right business for us. Just the thought of tenants, and at that time I knew nothing about real estate, so tenants scared me. I was like, they're going to call me for toilets and the horror stories you hear. And so I said, no, I don't want to do that business. And she tried to get me and her brothers actually to do this business, and I said, no, I don't want to do that business. So that book stayed on the shelf. And I had a buddy, his name's Devin Elder. He's a very successful syndicator right now, and I saw him posting on on Facebook about rental properties. And I guess before that, I knew that rentals worked. My wife, again, we wanted to move into a bigger house. Well, I wanted to move into a bigger house. We had a third kid on the way, and our house was tiny. It was like 1,000 square feet, and we were cramped in there. And I wanted to move into a bigger house. And I said, hey, I found a house. Why don't we move? And she said, the only way that we can move to the house is if we keep this current one and rent it out. And so I reluctantly said, all right, fine, let's rent this one out. We'll see how it goes. And I was amazed that someone would pay me, I think at the time it was $1,400 or $1,200, I don't remember. And, after all my expenses were paid, I was left with $400 or $500 a month, and I'd never hear from them. I lucked out and got a good tenant. I didn't know what I was doing when I was renting that house. And I said, can we do that over and over and over again? And so I called my bank, and what he told me, because it was the wrong bank to talk to about real estate investing, he told me, sure, you can buy a second one. We just need, 30% down, and your rate's going to be high, and you need this type of insurance. And then if you want to get another one, the max you can get is 4. He told me no, basically. And I had to have hundreds of thousands of dollars to buy, just 4 houses. And I said, that's not going to happen. And so, I was working my corporate job, and I saw Devin posting on Facebook, another rental. Every couple months, he was getting another rental. And I said, I know Devin really well, and he works at a similar type of job that I do. How is he doing this? And because my banker told me I couldn't do it. And so I had lunch with Devin, and Devin opened my eyes into the world of single family the BRRRR strategy, right? And this is before Bigger Pockets and before all that was popular. And so once I learned that trick, and I was like, how fast can I do this? And so for the next few years, we were buying as many properties as we could. And it started to get to the point where, we were running out of capital to buy those properties. So we started flipping properties, and then we really started to try to find them off market. And so we started buying from wholesalers. And then as the market got more competitive, I'm in San Antonio, Texas, the margins started to get thinner and thinner. So then we said, hey, why don't we market directly to sellers and cut out those wholesaling fees and see if we can, and anything that doesn't work for us, we'll just sell to somebody else, and we'll cherry pick the good ones. And so we did that. I had a wholesaling business for a couple of years. That's a tough business to be in. And I looked at it and I said, I think the fastest we went was 6 rentals in 1 year. And it was a second job.
Oh man, that's a lot of work, man. I'm just thinking about that and getting sweats right now. That's a lot.
It was. And it was a full-time job along with my very stressful W-2. And I looked at where we were at the end of that, and I said, I've been doing this for a few years, and I'm nowhere near getting out of this W-2 job. I still have a lot of work to go. And is there anything out there that's faster? And I had been hearing from my buddies like, hey, Devin was one of them. You should look at multifamily. It's the same effort you're going to put into a single family house, except with that same effort, you're going to buy 100, 200, 300 doors, and it scales a lot faster. And you get a lot of other benefits, right? Like economies of scale. Your fees, the larger the property, some of your fixed costs, like the percentage wise, they go down. And so I started to passively invest. And so we passively invested into a few deals. And I remember that my first passive investment was scary, right? I got sent this 50-page PPM, and all the pages were meant to scare me except for one, I think. And really the only reason I invested is because I really trusted the sponsor, the person that was running it. And I said, I know that, and it was Devin actually. And I said, I know he's not trying to take my money. I know the guy for a long time. He's a good friend. And so I'm just going to go ahead and invest into this deal. And it was one of the best decisions I ever made, because all those properties they're still returning capital to me. In this market, things have just gone up and up and up and up. So these properties now, when we cash out, the projected returns then were very conservative 4 years ago. And now that these are probably going to start to sell, the returns that we're going to get are going to be really nice. So after that, I took the next step, co-GP'd into a few deals, and we're continuing to do that. And now we're kind of like branching out and saying, hey, I think we want to run our own deal. We're to the point where we feel comfortable enough, we've learned enough, we're out there looking and trying to source our own project to do. Anywhere between probably 100 units up to probably our max would be about 300 right now. And so it's tough in this market. We're not seeing a whole lot of things that pencil out, and we're trying to find something that works. And we're very conservative with our underwriting. So we're not just going to get into a project just to get into it. We're going to make sure that we're a good steward of our investors' money, like we always have been, and make sure that it works really well before and we'll find something. It's just a matter of looking at enough deals to find something.
Thank you so much for sharing. Lots of wisdom there, a lot of things to unpack. And I have like 8 questions from all of that I've been trying to, keep in my head while you're telling this amazing story. A lot of this it's very relatable, what you're saying, because everyone or most of the people that are listening to us right now have W-2 jobs. And so this kind of one step of putting it in front of the other and just consistent work over time obviously is leading you to where you are today right now, which is incredible. You're doing your own multifamily syndications. And obviously we're going to talk about your W-2 exit because I know that's something you're particularly proud of. But let's try to go all the way back because I want to try to bring it back to some of the basics, right?
Sure.
What were some of the conversations at home when you guys started talking about doing this on the side, right? I know that your wife seemed to be the impetus behind all this, but what kind of conversations were you having with, I don't know if I can do this, I don't have the time, or were there any doubts, or what was that like when you first started?
And also, did you finally crack open that yellow book that was on the shelf?
No, I never read the book. I wish I still had it. I think we gave it away, but if we still had it, I'd like put it in a frame on our wall. That's our beginnings. Like you can start from this type of beginning, but no, I wish we did. Darn. And I never read it. It's probably good too. Who knows?
I bet it is.
But no, we were 100% confident going in. I lie. We were very scared. I remember telling myself on our first rental property, and I was so scared. I looked at it and I was like, oh my gosh, this place is totally trashed. And thinking back on that house, that was such a clean house. There was hardly anything wrong with it. But at the time, I was used to seeing, on the market houses that were nice and fixed up. And the thought of buying a house and trying to fix it up and not knowing what's wrong with it before you buy it. I was buying it from a wholesaler. And I thought in my head, I said, okay, I'm going to probably drop $20K on this house. If it doesn't work out and I lose $20,000, I'm going to learn a lot. And that's like, I can just say this is a good educational cost. Like I had no problem spending $40,000 on my degree. Like this is going to teach me so much because I'm going to actually be doing it. So if I lose a little bit of money, it's okay. And we're going to learn a lot. And then we can go out there and do it again from the things that we learned. And my wife was the same. She just said, this is scary. I trust you. Whatever you think, if you think this is going to work, go out and do it. Because her strategy was not to buy houses that needed work. Her strategy was to just buy a house and put 20% down and then rent it out, not have to do any work to it. But I knew the real money after I studied this BRRRR strategy was really finding something that's broken, creating some value by rehabbing it, and then refinancing it. And, being in, I think that first house we were in total into that thing at $9,000, and it was cash flowing like $550 a month. So it was a great investment.
Nice.
It ended up doing really well. I was always waiting for when's the gotcha? Okay, I closed the first one. When's the gotcha? Okay, we rehabbed it. When's the gotcha? And then, we refinanced it, and then we got a tenant in there. And a year later, I said, I guess there's no gotcha. I guess this thing actually works.
Wow, that's fantastic. Awesome. Well, great. Thank you for sharing that early story with us when you're starting with the BRRRRs. Now, let's talk a little bit more about how you're able to balance this out with your W-2, because everyone may forget here, and I didn't forget in this whole story because I've done it myself too, that as you're trying to build this thing up, all these things that you're doing, you said that you went in to go look for the property, you went inside the property, you're like, okay, this is going to be 20 grand worth of rehab. You're renting it out. People may conveniently forget that you're also working a full-time job. So how were you able to do that through, and how did you keep your motivation high?
So it was a lot of early mornings, late evenings, and weekends. And I was really lucky that I worked in IT, and they're pretty flexible with schedules. So if I needed to leave for an hour, take a lunch like off outside of the building, I could do that. And if I needed to take a phone call during the middle of the day, I could do that. It wasn't like I was sitting at a computer. I had to sit there all day. So that was part of the success. And then it was just a lot of hard work. I know it sounds really easy when I say it in a 2-minute, but it was a lot of hard work. I remember being in, looking at houses in the middle of summer in San Antonio. It's brutally hot here, just real like sweating. And then I had to go back into work completely drenched in sweat
Yeah.
and be like, oh my gosh, I should have like planned for this, but there's no way to really plan for it. And, looking at 10 houses and not buying one of them because the deals just didn't work, or it was too much rehab, or wasn't the right area, or whatever it was. So it was not really a balance. It was working really hard for a lot of years and working my full-time job, maintaining that, because I didn't want to let that fall off, right? I owe it to my employer to do really well for them because that's what they hired me to do. And I couldn't do a bad job there. And really after work, I remember going into some of these houses in the morning and calling the contractor at 6 o'clock in the morning, 6:30. And I had to get there before I got to work. And I was like, hey, did you show up yesterday? Because it doesn't look like you did. And, that type of stuff. And it was tough. It was definitely tough, but you got to make it work. And my goal, you got to find your why. And my why was, I'm missing my kids growing up. I want to see this stuff. And so it was really like, I've got to do this now in order to be my time to be freed up later, and just putting in a ton of work.
Very cool. Yeah, no, thank you. Thank you for telling that and shedding light on that, because it's a simple business once you understand it, but it's not easy. And
No.
the not easy can come and bite you very quickly, right? So I know exactly what that's like. And so, yeah, thanks for sharing that. And I do want to highlight the why and how important that is, because it was either Jim Rohn or someone else. It's a book that I forgot that I've read a couple of times, and I think because we read so much of these books, they kind of all blur together. But I think it was, if your why is big enough, that gives your how legs. So
for sure,
as long as you have like a strong enough vision, then you'll be able to carry anything through to success. And so I know it's a lot of work, and many people out there that are looking to get started, either directly going to multifamily right from the beginning, if they're planning on not doing it passively. And even if you are doing it passively, there is a little bit of a phase there where you're studying up and doing due diligence alongside your full-time job. And that's just the way that it has to go, right? That's just the way. And so everyone has to kind of go through that little spike of effort, right? That I like to call it.
For sure. For sure. Yeah, that why will make you think when you're 9 p.m. and you haven't been home all day, you haven't had dinner, you had breakfast and you haven't eaten all day, and you're standing in this house and it's in shambles because your contractor didn't show up. These are like real things that happen. And you're driving home and you're like, okay, I'm doing this for a reason. And it's a good reason. Because I don't think if you have that, you're not going to put yourself out there like that and go through some of that painful stuff that you have to go through. So it's super important.
Yeah, and Ruben, also, I wanted to highlight what you said earlier, because it was so powerful that both you and your wife both said, I'm scared, but we're going to do this anyway. I trust you. And, again, a lot of our listeners are couples. Maybe one is more sophisticated than the other. And it's important to, through this journey together as a unit, right, to ensure the greatest success for both. Can you maybe talk a little bit about more of the mindset and maybe the growth development that you and your wife encounter together as you're on this journey and you're facing these these hard moments, and how did you get beyond them?
Yeah, I think the mindset was, we trust each other. And if something happens, we still have the things that are important. We still have each other. We still have our kids. If we lose all of our money and move out of this house, like, that's not really that important. It's material things. We can always replace that. If I were to lose my job and lose all of our savings, I can go work somewhere and we can live well below our means. We can live in a small apartment somewhere and we're all going to be happy. And the kids don't care. The kids don't care if they're in a tiny apartment or a huge mansion. They just want to be with you, right? So I think that was really the mindset that we went in with. And that's grown over the course of the last few years. Right now, it's more of a, how do we have a more growth focused mindset? Because really, we do really believe, like, the only difference between me and someone that owns 10,000 units is mindset. It's our limiting beliefs. And so really we're focusing now on how do we expand our mindset And it's hard, it's tough. And because you're so used to what you think and what you have and who you're around and all that stuff now, that it's tough to try to expand your mindset. So we've gone from that end of the spectrum to where we are now. And but it's been great. It's been great being able to do that with my wife, for sure.
I couldn't have said it any better than you, man. That's awesome. Really, really good. I think one thing that many people are curious about, okay, and I've been thinking about this a lot after doing some research on you before the show, is can you walk us through the moment that you discovered that you would be able to leave your job with real estate investing? And what type of emotions, realizations came up, and what was it like having that conversation with your wife and maybe even your kids? Can you take us through that?
I wouldn't say it was a moment, because we had been planning for this for a long time. Like, that was the end goal, right? And your goals, as you get closer to your goals, you start to have different goals. And so it wasn't really a moment. We'd been planning for it. I was working for a software as a service company, and we had a big exit, and we got paid some stock. And when we talk exit, it's not like you're making millions of dollars in these exits, right? As an executive, because there's taxes, and there are a lot of taxes, and there's holdbacks, and there's things like that. The company doesn't always sell for what you thought it was going to sell for, and things like that. And so we were at a point where I had been offered another job by the same company, great company, and they said, "Hey, come be an executive at this other company." And we're at do I want to continue down that route, or do we want to? And it was a great income. It's like, do I want to let that go? And we had some money coming in from rentals. So we were going to probably just enough to pay the bills, but not a great lifestyle, right? We're going to pay the bills. And so we really needed to focus on real estate. And at that point, it was like, do we continue down this job route, or do we really go after what we really want and not limit ourselves? Because at W-2, you're going to be limited by salary, right? There's very few of those that you can make millions and millions of dollars. So it was basically, I don't know if you heard the story of burning the boats, right? But It was like, let's burn the boats and go all in on real estate and really work hard. If I work, and I kept telling myself and my wife, if I work half as hard as I do at my W-2 job on my real estate business and focus, there's no way we can't succeed. And my wife had a really good analogy. She said, let's not die of thirst in the desert with a canteen full of water. And what she was talking about was all of our rentals. Like, we have money, we have a means to support ourselves. And the analogy really is, she had read, I don't know where she read this, if she was on, maybe next time she can talk about it. But she had read that a lot of people, when they find them, like, they get lost in the desert, a lot of times they'll still have some water left in their canteen. And they were saving it for this rainy day when they really needed it. Like, well, in the desert, not a rainy day, but they were saving it so that last drink of water, and they ended up dying because they were saving that water, which could have made them go a little bit longer, and maybe they could have been saved. And so she said, like, let's not die of thirst. We have a canteen full of water. Like, if we need to use that, let's just use that. So, but it was really scary. Even though we had all that, it was still scary, for sure.
Wow. So I'm sorry for dominating more of the questions, because I'm in such a relatable position right now. Because personally, I'm still working a W-2. I'm investing in real estate on the side, and I'm also got this podcast going on. But the way that we can do that is we split the work up and we work together. But yeah, and I think that's the way to do it. I want to ask you, how did you guys determine where that exit was going to be when you left your job? Like, how did you work that through? Did you take a look at mechanically? Did you look at like the cash flow that you're getting from your rentals, or did you look at the equity, or did you have some cash saved up as like a runway to help offset some of your current expenses? What did that look like for you guys when you made that determination?
It was a little bit of both. So we said, hey, we've got cash flow from rentals. We had an exit at work, so we got some capital from that. And then we needed some additional, because you can't go out and start a real estate business. Like, I can't invest in apartments and not put money in it. If I'm raising capital from investors and they ask me, how much do you have in the deal? And I say nothing, like, that's not a good story, right? So you have to have 50 to 100K in every single deal. And we really said, okay, well, we need to save some money to be able to put into those deals, so I can confidently go to investors and say, yeah, I have 100,000 of my own money into this deal. And I think it's a good investment, and people will invest with you more if you're investing in it too, right? I can't in good faith go out there and raise capital if I'm not investing into the project.
Yeah.
And the bank's going to require it too, right? So we had some savings, and then we had some cash flow coming in, and we said, all this combined, we can go do it. And then we had a plan too. It's not like we just went out there without a plan. Our plan was, okay, let's get into a multifamily within the next 9 months. And if we do that, we can, have a little bit of money coming in from that. But really, a lot of that's going to be coming back into the deal. But we also had at the time a wholesaling business that was generating some cash flow, deals, right? But it's more of a grind. But that was kind of on automated, like it was a little bit automated. We wanted to kind of try to expand that. It wasn't a great thing to try to expand. Looking back on that, it was a lot of work. That's a grind business. Do it if you have to, but try to get out of that as fast as possible, because it's brutal. It's really brutal. And so it was a little bit of both, a little bit of everything. Like, here's the plan, and let's go out and try to do this. And worst case, if we fail, I can always go back and get another job. Like, there's no shortage of jobs out there.
Bingo.
And so, yeah, it was like, okay, well, that's the worst case. Great. I'm doing that already. Worst case scenario is what I'm doing already. So that's cool.
Right. Well, thank you. So you've taken us all the way from when you started working your W-2 through to thinking about, basically investing in real estate. And then you started to think about, okay, now I'm ready to start leaving the W-2 and start thinking about that concretely. Now we're at a point in your story where you don't have a W-2 anymore. You're passively investing, right, in other syndications, and you're trying to save up and work the rentals that you have right now to get yourself into the multifamily space. Obviously, you're successful at that because we're talking now and we've had the conversation already. So this is already kind of in the past. But what are you looking for nowadays? Like, what type of property does your investment group look for? And talk us through like what it is that you're trying to do these days.
Sure. So we are solely focused on Class B and C assets. And for those listeners that don't know what B and C is, right, there's usually 4 classes of assets: A, B, C, and D. A is going to be your brand new stuff, really nice, high rents. B is going to be, a little bit older and it's still pretty decent neighborhood, but a little bit higher rent, a little bit lower rents in your Class A. And then Class C is going to be in a probably older neighborhood, 60s or 70s builds, very affordable rents. And then Class D is more of your, war zone, probably needs a lot of work. You probably don't want to hang out there at night, kind of rougher areas of town. And so we're looking for B and C. And the reason we chose B and C is we feel there's some safety in B and C. You don't have competition from new build apartments. You don't have a competition from houses, because most of the people that are renting your B and C assets, they can't afford to buy a house just yet. It's rent by necessity. And you're not on the bottom end where, a Class D, you might have 3 or 4 people living in an apartment, and, one of them loses their job and they have to go live with relatives in a house or with grandma or something like that. So we feel there's some safety there. And in a recession, people need to save some money. And let's say your rent is at the higher end, and you can say, hey, I can move into the B asset a few miles down the road and save myself a few $100s a month. So we feel there's some safety there. And over the last year, we've seen the results, right? In this COVID situation, where we haven't seen a whole lot of vacancy. We've actually maintained the 93 to 95% range is right where we want to be. And so feel there's some crossing your fingers. We feel there's some safety there, but time will tell on the COVID thing. Maybe it might hit us, maybe not. We'll see. I feel like Texas is a good market. We're also focused on Texas in San Antonio. And the reason is we know this market really well. I've been investing here for years. You can tell me this part of town, I know what part of town it is and what it's kind of like there. I know what the rents are going to be like over there. I can drive to any property within 20 minutes and go out there. And if I need to pop in and, talk to the property management team, I can do that. Not only that, but Texas has really good fundamentals, lots of jobs, lots of people moving here. Rents are climbing still. They're going up every month. So what you want to see is all right here. And we're going to continue to look until we start to run into the problem of not being able to find a property. And then we can kind of look at expanding our market. With expanding your market comes, a lot more research, probably a different team, because you want someone that knows the market better than you do, right? If I was investing in Idaho. I'd want to have somebody with boots on the ground that's there in Idaho that I can partner with, that can tell me a little bit more, because I won't know that stuff. Maybe I can take on a different role. So, and yeah, we're looking for anything that really, our number one focus when we're looking at properties is, what is our net return to our investors? And can we conservatively pro forma, can we conservatively hit those every single year? And if we can, then we'll usually end up buying the property. So, and we're also looking for 100 units to probably 300. I think we talked about that. And the reason for nothing lower than 100 units is, I mean, it varies 90 to 110, depending on what area of San Antonio. But the reason for that is we want full-time property management and full-time maintenance, because we can save money doing that. And we can do some cool things for our investors, like, hey, we can offer door-to-door trash service. And instead of having to spend more money to do that, we can just say, hey, maintenance guy, when you come in on Thursday, can you go pick up trash from the property and throw it in the bin? And we can charge tenants for that. And tenants love it because they don't want to go to the dumpster, and they're willing to pay $20 a month or whatever for that. And it's no cost to us because we're already paying salary for our maintenance guys. So we can do things like that, which is cool. It's harder to do that on the small properties. And in my opinion, your tenant experience suffers when you have a part-time property manager. And we want to provide communities that are a great tenant experience, because those people will stay and they'll tell their friends. And that's what we want. So we want to create really great communities for people. And it's hard to do that in a small property. Not saying you can't do it, but that means I have to work a lot more. And I want to spend my time finding better deals for our investors. So
that's great. Yeah, no, that makes perfect sense. Thank you so much. And I'm also taking notes here myself as well. So that's good stuff. I appreciate that.
Yeah. Cool. And I love the fact, Ruben, that what you said about you're not going to have an investment for your investors if you're not going to invest in it yourself. So there's a lot of integrity there. It sounds like you build really good relationships with your investors as well. I'm so happy. Congratulations, just to hear that you're just hearing your whole story and where you started and where you are now. The question I have for you is, looking back, if you had to do it all over again, is there anything that you wish you had known earlier on, just for our listeners starting out, or you would have done differently?
Yes, I would have gotten into multifamily sooner.
That's a very common answer, and I'm glad that you said it, because that's the answer that I tell people, and I've heard it 2 or 3 times before. Yeah, absolutely.
Yeah, your returns on paper are way higher on single family. I think our average return, we were buying, of course, in a market that was just shooting up, was 40%, somewhere around there. Our average cash on cash return was like 40% on single families. And I looked at multifamilies like, oh, that's not a great return, but just the scale of multifamily. And passively invested, if I had been passively investing the entire time I was working my W-2, I would probably have a lot more capital now than I did, and with a lot less work, right? Because you sign some documents, you wire funds, and then you maybe read a financial statement every quarter. That's a very powerful way. And you get all the tax benefits, which I think some W-2 earners don't realize. And for me, that was I had a high income and I was being taxed at 35%. And by investing in some real estate, and my wife, she didn't have a W-2. So she worked hard because we had a lot of kids, and she didn't have a W-2, but she was working just as hard. And she was the real estate professional, and we would share the responsibility of, hey, did you talk to the tenant? Because they called you. And she said, yeah, they're going to be late on the rent or whatever it was. And by making her a real estate professional on our taxes, I took my tax rate down from like 30%, and it went down every year, 25%, 19%, 18%, 10%. And then in 2019, we paid $8 in income tax.
That's amazing.
Which was so awesome. Now, part of that was because I had, that's the year that I think I worked 2 months of that year in actually that was 2018. So no, 2019, I wasn't working. I was just doing real estate, but we did sell 6 houses that year. So
that's work too.
And we went to put that into, I wasn't working at W-2, I should clarify, in 2019, but we sold 6 houses. So I thought we might get some capital gains coming to us, and, depreciation recapture was probably huge, but no, because we had invested in so many multifamily buildings, that depreciation would offset all that income from all those houses. So it was great. Yeah, it was great. So that's something that, if you're a W-2 worker out there, think about how can I claim a real estate professional designation on my taxes so I can take some of those benefits from my W-2 and lower my tax burden.
Yeah, and I'm so passionate about this. That's why I wrote a book about it, because there's people that I was talking to in my office that was like, how are you doing all this? And then, when I start talking about the numbers with them and I tell them, I also explain to them, unfortunately, I'm paying also less taxes than you are too, with all this income coming in. And they just like, their mind just kind of blow. I'm pretty sure that a few of them were looking at me like I was crazy and they didn't believe me at all, just walking away, scratching their heads like, this isn't possible. But after you take a look at it and you explore, it does make sense, because if you have all these expenses, including the interest, all of your property management fees, your taxes, your insurance, most likely, even on single family homes, the depreciation will kind of overshadow all of the net income. At least it should, if you're buying the right type of assets, or if that's a strategy that you're into. And that will pretty much reduce your net impact on your overall tax situation, which is fantastic. So I agree with you there. And I jump on that bandwagon to challenge all those W-2 workers out there to start thinking about that alongside you.
For sure. And, the mindset for us was, okay, if you're making $100,000 a year at your job, you don't have to replace $100,000 with real estate investments a year, because your real estate investments, if you do it right, you're not going to pay any taxes on that. So if you're in a 30% income tax bracket, you have to replace 70K of rental income, right? That passive income that comes in. You don't have to replace 100K. So it's not as big of a hurdle to get over, because the government, you're making 100K, they're going to take 30K right off the top. And so we always thought about it in terms of that, like, okay, well, we have these assets, and when we had our single families, we're taking paper losses still on all of our assets. So yeah, that's a great thing. And I still haven't read your book. I need to pick it up and read it.
It would be an honor to have you read it. I'll send you a copy.
Awesome. I'd love to read it, man.
Yeah.
Yeah, and Ruben, I think you're laying out really practical advice and just ways of reframing how to look at it. Like you said, you don't have to be 100% financially free for you to exit. You just have to, have your means met. I also want to highlight, going back to when you first told us your big why, that was the fuel driving you to just to grinding, to working so hard and doing all of this. Can you talk about what your day-to-day life looks like now?
Yeah. It's a lot different. I still work a lot, but it's not I don't work from 6 o'clock in the morning till 9 o'clock at night. So now I get up, I'm with my kids in the morning. We all have breakfast together, and I take them to school. I'm able to drive them all to school and drop them off. And then I come back, and me and my wife are able to work out. So then we go for a quick run, or she'll do some jump roping. And then I'll start my work day. And usually that's probably 8:30 in the morning. And I'll work for a few hours, and then I'm able to, I might have a meeting, I might not, but I'm usually able to have lunch with my wife if she's here. Sometimes she's busy too, but we can plan some of that stuff, which I wasn't able to do that before. And then, so I'll work, like right now it's at 7 o'clock, which is okay because I work late sometimes. And it's just a different workflow. I would say I probably work just as much. Well, okay, not as much as when I was doing flipping and wholesaling and all that stuff. I'm not working that hard. But just like a W-2, 40 hours a week, I'm working 40 to 50 hours a week. It's just different. It's a different flow. And you can work it better around your lifestyle. So now when my kids come home, I always try to be home when they come home. Because if they kind of brain dump on you when they get off school and they tell you everything that happened, if you miss it, you miss it. Like, you can't ask them later. They already said it. They don't want to talk about it anymore. And so I really love to be home when they get here, because they'll tell me about their whole day in like 10 minutes. And it's really cool. And I wasn't able to do that before. And my wife would tell me, and if my wife told me, it's not as good as when the kids told it. And it's just different, right? And I'll probably work tonight a couple hours when the kids go to sleep. I get back on and shoot some emails, or maybe underwrite a property, or maybe jump on some social media and do some posting, something like that. So it's just a different workflow, and it's a lot better for my lifestyle now.
Yeah, and it sounds like your happiness fulfillment factor has gone up exponentially.
Totally. Yeah.
Nice.
Yeah, I think that's really important, that flexibility. And, I'm going to be careful about how I say this, but because you haven't picked up a job, right? I want to emphasize to the W-2 listeners out there or the investors out there that may be aspiring to where you are, Ruben, what you're doing is not a second job, it's a business. And you can choose to exit it if you want to, because I get the feeling that with the assets that you have, all you're trying to do right now is help more people, both your investors, the residents that you're working with, and your partners, and impact everyone's life, right, in a more positive way. And so you're drawn to do that rather than being drawn to the need to check in and out of a timesheet every day, right, and fulfill someone else's dream, right? So I want to make that distinction, and I wanted to check with you to make sure that that's what you're experiencing as well.
Absolutely. It's a lot of fun, right? When you are making a difference in your community, you're going out there, you're taking these buildings and you're producing a better product for tenants. You're taking, like we looked at one and just really bad management, right? When I got there to tour it, there was a line, it was noon and there was a line. It was actually before noon, 11:30. There was a big line outside of and people were asking me, hey, do you work here? And I was like, no, I don't work here. And, it's just like these people are busy and there's no one there to answer their questions. And it's like, let's buy this place and give better customer service in that. Like these I felt bad for them. Like, I wish I could help you, but I don't own the property. I'm sorry. But yeah, and also, you're providing value to your tenants, to the community, because you're keeping the place clean and safe. And you are providing extreme value to your investors, right? Because they're able to go work their job or work at their business or continue to be retired, right? We have investors from all walks of life and still have that income coming in and the tax benefits. And so, yeah, it's just, and you're building something for yourself, like you said, not for somebody else. And you have an unlimited earning potential, right? You can go out if you want to. Like, that's probably not my dream to go out and get, 400 apartment complexes. But if you wanted to in this business, you can totally go out and do that, right? It's infinitely scalable. So yeah, it's just a whole different type of environment from W-2.
Yeah, and that's what was so attractive to me, is that, again, it's the win-win nature of it, right? So for those W-2 listeners or people that are working a professional 1099 situation, either they're doctors, lawyers, anyone that's trading their time for money right now, even investing passively with someone like Ruben. I mean, how can you not like Ruben and not want to invest with Ruben, right? Like that's exactly what this business is all about. Is you grow together, and it's about relationships and people on both sides, right? As syndicators, we're involved in talking with all of the people that are doing the work on the asset itself, but we're also talking with the investors, the people that we're helping to change their lives, right? By working together with them and partnering up on apartment building purchases. Making that distinction of like being motivated by being a stronger and bigger person for everyone, for your teams, for the people that you're improving the asset for, and then also for your investors. I think for me, that's what really has been motivating me to continue moving through working W-2 and also learning my way and earning my way through multifamily investing. Just wanted to throw that out there too.
For sure. And I think one of the benefits that I think people forget, and this is just me, it's not for everyone, but when you free up some of your time, you're able to give back in ways that you weren't able to do when you have a W-2. Like, we volunteer with an organization called CASA. It's a court-appointed child advocate. So there's a lot of people out there. There's a lot of kids out there that are in CPS custody, Child Protective Services, and they are in the system. And the system's pretty brutal. The attorneys will walk in, and that's the first time they've ever looked at the case, and because they have 100 cases. And the same for the CPS worker, and who's really looking out for those kids. So it's been really fulfilling to be able to, when I first got out of my W-2, that's the first thing we went and did is signed up to volunteer for that organization.
How awesome.
You can do cool stuff like that when you are out of that W-2, right? And a lot of this stuff, like court, we go to court and we report to the judge, that all happens during the day. That'd be really tough to do with a W-2. And so you get to do some cool stuff like that. And I think people forget. And, as you make more money, not only as you make more money in these syndications, you are able to give that money back, right, into your communities and donate some of that. Maybe start a foundation. Devin just started a nonprofit foundation. So I was like, hey, maybe we should do some of that too. That's really cool. So there's a lot of benefits of this business in that respect as well.
Ruben, gosh, you're so inspiring. It's just really amazing to hear. Again, I think, everyone listening, hopefully they can understand that, you're on all levels a whole life abundant person, and you're sharing that with others. And then that's really important to highlight. You said earlier that, as you get closer to your goals change, right? So I want to hear what's on the horizon for Ruben and your family, and what other goals are next on your docket.
Man, so this year we're trying to do 500 units. So invest into 500 units here in San Antonio. So that's our number one goal. And that's really because we haven't done a deal in about a year. And we have investors that are like, hey, you're going to do a deal or not? And we tell them, like, we're not going to do a project until it's the right project. And we, there was some COVID in there, and we didn't do anything for 6 to 9 months. We didn't touch any deal. We still looked at them, but the banks were like, hey, we don't know if we're going to lend you money. So we're like, well, we're definitely not getting a deal if you don't know if you're going to lend money. So, but once that kind of went away, we started looking at deals again. But so we have that goal. And then we started a couple other companies where we have some goals. One is a commercial real estate brokerage, because our bottleneck was we're looking at all these projects and we're having a problem with analyzing them. When we're in a deal, anything that comes in, we're not looking at, because we're in a deal. Or we might miss something that's in a different market that's a little bit, it's still in San Antonio, but it's maybe a 30-minute drive instead of 20 minutes. And so we started that brokerage, Devin and Devin had the same problem. He said, why don't we just hire someone to do that? And we'll pay them a buyer's fee, right? So they can go out and find the deal, negotiate it, and just bring us things that work. We also started a coaching program for people that want to learn how to syndicate. And so we have a lot of members that are also have the same bottleneck. A lot of them are W-2 workers, right? And they want to get into this business. And you can go study all this information, you can do it, but they wanted the easy button. Like, hey, I want to learn how to do this in a coordinated way. I don't want to listen to tons of podcasts, and I don't want to go on bigger pockets and research and read all these things, because you can piecemeal it together and learn how to do this business. But they wanted to push the easy button, learn how to do it from someone that's been successful at it. And they have the same problem. Like, they can't spend all day underwriting deals because they're working, or they have a business. We have a lot of business owners. And so they are looking for deals. And so we said, why don't we just start this brokerage so they can source all these projects for people and just say, here it is. It's on a silver platter. Here's the numbers. It works to what you're looking for. And so we have some goals in those business, some pretty healthy goals. And that's been a lot of fun. It's been taking a lot of time from my day, but it's been a lot of fun. And so beyond that, we haven't really thought about it. Like, personally, we're so busy because the kids are in school and they're getting to that age where they're playing soccer and they're doing all kinds of activities. So we feel like, my wife's like a taxi driver all over the place, taking kids to different places. So other than that, nothing, no lofty goals like, trips or anything like that. We're really just trying to grow these businesses and provide value to our investors and our partners and just live a happy life.
Awesome.
Nice.
So great. One thing I wanted to add on to this, and I've mentioned this before on some other podcasts too, but for those of you who are looking to try to do what Ruben's done, right? First of all, Ruben's walked a very long path, and it takes time to be able to get to the success that he's in. And so, but as long as you're taking steps, right, one in front of the other, and you're being consistent, that's important. But I can't emphasize enough to the listeners out there, if you're really serious about starting with multifamily or even starting single family and you don't know how to do it, get a coach. Find someone that can help you do it, because the effort and the energy that you're going to spend, if you were to take all the, because Ruben, you and I think a lot alike, because, as you were talking about your W-2 experience and also the things that you were thinking, in your criteria and everything, I'm 100% in tune with that. But what I'm thinking is, as someone is starting their journey in understanding how to do all of this, if they're spending their time trying to piecemeal and put everything all together, figure out how much time you're spending versus how much time you'd spend if you did it with a coach, right? Like, try to figure out your dollar per hour that you're going to be wasting going around in circles. And then also don't forget too, that multifamily investing is a team sport. If you're doing all of this yourself and you're not networking or talking with other people, it's going to take you much, much longer to get there, because in order for you to interact with brokers, you have to work with the broker. It's a people to people thing, or you got to have someone that you trust, that you've been talking to for a long time, that has that relationship. That doesn't happen immediately overnight. That takes time. It takes consistency, and it takes the ability to stick with the goal, build relationships, and just be a good person in general, because that's who everyone wants to work with. Everyone wants to work with good people, not with people that are hard to work with. So I guess I'm rambling here a little bit, but all I'm trying to say is go sign up for Ruben's coaching program.
I agree. I mean, I was in coaching programs. I've been in a couple.
Me too.
And some of them are really expensive. And I still sign up for them. And now I do it for the networking, right? And I can still learn some things, but I do it now to network, because you're right. Building your team is half the game, is having a great team. So I still spend money on coaching programs, and I would never take any of that money back. Like, all of them were very valuable. I learned a whole lot. And yeah, the building your team, we tell people in this business, because people look at it like, oh, there's no way I'm not buying a $10 million apartment complex. I can't raise the capital. I can't qualify for the loan. And so we always teach people in our program, like, that's okay. You can fill whatever deficiency you have with a team member that can fill. And it's so common in this business. And I've never done a deal without a team. On every single deal we've done, there's been at least 2 to 4 people on that project, except for single family. I did on my own. But there's just not enough dollars to go around in a single family deal, right? If your profit's $10,000 or $20,000, you can't really split that 4 ways, and for working that hard at least. But in multifamily, these are big deals, and plug in a partner. And it's really more important to just get deals done, especially when you're starting, than to try to maximize every dollar for yourself on that deal, because you can go do 3 or 4 deals with that team instead of just doing 1 on your own.
Bingo. I think that's so important. And thank you for saying that. I think that I love that what you just said. You said whatever deficiency you have in any investment that you're pursuing in multifamily, you can fill it with a team member. I think that is so dead on. And that's going to be the title of the show, actually. That's what I hope, because that's great.
I have to say that I didn't coin that phrase. That was Devin. He coined that phrase.
Well, but still, I mean, you're bringing the knowledge to us, and I think that's just as important. And so thank you for sharing that. So I think we're getting to a point now where we're starting to wrap up. We've actually been talking for almost an hour right now, and it's flown by for me, and I hope it has for you and our listeners as well. But we're going to head into what's called the rapid round. It's 5 questions that we ask every one of our guests, and we like to categorize them and compare. So it's cool. Good. It's a fun thing.
That sounds fun. Let's do it.
All right. So question number 1, what book has had the biggest impact on you and why?
That's changed too. So I used to be able to tell you it was Pitch Anything by Oren Klaff. Have you read that?
I have.
It's good. And when I was first starting to raise capital, I read that book, and it gave me a good insight of how human brain functions and thinks. And it's fight or flight, right? If you're bringing them this investment, they automatically think it's bad. It's bad. I'm going to lose my money. Yep. And so there's some techniques in the book that tell you how to get around that. And once you learn those, it's really easy and people feel comfortable. And I think, when you understand how the brain works. Now I'm more into a book called The New Psycho Cybernetics. I don't know if you've heard about this book.
Is it by the medical doctor? We
Yes.
have the Psycho Cybernetics, original book?
Yeah, there's an original one, and he was a medical doctor. He was plastic surgeon. He was one of the first plastic surgeons, and he'd have people come in, and they say, "Change my face, doctor." And he's like, "Do you really need your face changed, or is that your self-image of yourself?" Mm-hmm. And so he kind of helped them through that before the surgery. And there's a new one. The new one's a little bit easier to read. It's called The New Psycho Cybernetics. I'd probably recommend that one because it's a little bit more updated. This book was written in the 50s, I believe. So it's a little hard read, the original one. But the reason I really like this book is, we talk about mindset, and the more successful you get, everyone talks about mindset. Like we talked about at the beginning of the show, the only difference between me and a guy that's more successful is our mindset. But to change your mindset is really hard, right? Because everyone will tell you, oh, you got to be that guy before you are that guy. And it's like, okay, well, that's easier said than done, right? Because your mind holds you back. And so I wanted to find a book that would really help me with practical things that I can actually do and techniques. Like, how do you have a better mindset? And so that book really teaches you some techniques on how to have a better mindset, and it really about self-image. And if you've done something in the past that's holding you back, that book will give you some techniques on how do I get past that with my mindset and really your self-image to be able to move my mindset forward. And so I really like that book because of that. I'm rereading it right now. I would suggest, give it a go. Listen, it's on Audible if you're not into reading and you just want to listen to it. But that's a good book.
I'm ordering it the minute we're done here.
Yeah, there's a lot of homework that we have after this. But all right, question number 2. If people wanted to be just like you, Ruben, what is the first actionable thing that you think that they could do to follow in your footsteps?
Probably depends on their situation. If you have some capital and you got 50,000 or more, start investing. If you can't be active, put it into a passive deal, kind of learn that. And we say there's a 3-step process into apartment syndication. The first thing is invest passively, and you're going to learn a lot about how these work. You're going to see the paperwork. You're going to get some cash flow. You're going to get some financial statements. You can kind of see what these investments are like. Step 2 is partner with someone that's really experienced that can show you the ropes, right? And I did that on my first deal, and everyone I know that's done these deals has done the same thing. Like, you partner with someone and they're the main operator, and you're going to learn so much from that. And then step 3 is go out and do your own deal if you want. Some people stop on step 2, some people stop on step 1, and you can really kind of, by doing it that process, you can kind of see what's your comfort level and where do you feel comfortable and how far do you want to go. Because running these deals is tough. And doing it all on your own is tough. Some people want to stop at step 2 and I want somebody else to run it, but I'll be there to support them and I'll help make some decisions and maybe do some underwriting and learn a whole bunch. So I say it depends. Now, if you don't have that capital to invest, then take some type of action. If real estate investing is your thing, if you have 0 capital, start wholesaling. If you have a little bit of capital, you can get a couple rentals, do that, because wholesaling is just a means to get some rentals, because you really want rentals for that passive income, and they're making money in like 5 different ways. We won't go into that now, but I would say just take some action, and wherever you are in your path to investing, just take action, whatever you do, and keep taking action and keep following a step. And time flies. Before you know, it's going to be 10 years and you're going to be doing syndications and be like, oh yeah, that was 10 years ago. Wow, it seemed like so far away back then, and now we're here. So
awesome, great advice. And next question is, what small thing do most people not know about you?
Oh gosh, most people don't know that I have been playing classical piano since I was like 4 years old.
Oh wow,
awesome.
So I have a piano and I rarely play it now. I'm pretty rusty, but yeah, I've been playing since I was a young kid, and only classical. Like, I don't know any other style of piano besides classical. So it's kind of weird because, not a whole lot of people are into that style of music anymore, but.
That is so cool.
Nice, very cool.
And how do you like to unwind and restore your own creative juices?
Working out. Like, we usually run in the morning, and then being around the kids, probably number 2. Because I'm trying to, their energy is crazy. And I'm trying to absorb some of their energy, and they're just so fun to talk to now. They're a little bit older now. Our oldest is 12. He's about to be 13, and they're just so much fun to talk to now. And you learn so much about yourself from kids. It's crazy. Yeah, it's really crazy, and it's just so fun to be around them.
Love it.
Nice. And our last question is there something special that you and your family like to do together?
We like to take trips together. We didn't this last year, obviously, but we try to take a trip to, my family is from New Mexico, and it's about a 10-hour drive from here. So we try to make that trip once a year to see them, but we go to the mountains. It's a city called Ruidoso in New Mexico. There's not a lot of people know about it, but it's a really beautiful little city, and there's a lake, and there's hiking if you go in the summer. In the winter, you can actually ski there. I used to ski when I grew up, and so we really enjoy taking trips and getting out there at least once a year.
Very cool. I have a feeling that this small place in New Mexico may suddenly start to get a lot more visitors.
It's a really cool place and so affordable. Yeah, so I'd recommend if you want a place to go that's affordable in the mountains, it's a great place to go.
Awesome. All right, cool. Well, thank you so much for sharing. That's the end of the rapid round. We appreciate you. So now that we're at the end of the show, I want to give our listeners an opportunity to find out more about you, Ruben, and what's going on in your world. So I'm just going to give you an open plug right now. Maybe tell us a little bit about your coaching program. Tell us about how we can find out more about you, and maybe if we're interested in learning more about your investments and some of your offerings coming up.
Sure. So interested in investing, you can go to our website. That's totem, like a totem pole, totemcapitalgroup.com. And there's some information there. You can set up a call and I'd love to chat with you, see what your investment goals are and see if we can hit some of those goals for you. And we do offer a coaching program. So our coaching program really was Devin. He's a very experienced syndicator. He's tons of deals. I don't even know how many units he's in, a lot. And him and I really put our heads together. He's a great teacher and he doesn't really enjoy the operational piece of like putting this coaching program together. Was a nightmare for him. I come from an operational background, so I did in my career. And so we really want to put our heads together. And we together have probably been in 6 different coaching programs if we put ourselves together. And there's some things we loved about them and there's some things that we didn't like. And we said, let's start something that will bring people value from our experience in all these other programs. And also it was really, we started it because I'm sure you're experiencing this at work. People will come up to you and they'll call you and they want to learn what you're doing because you're doing cool stuff. And like, hey, tell me what you're doing. Like, let's have lunch. And it was really tough because, we go out and have lunch or, have dinner and try to teach them, like trying to teach syndication over lunch. It's not going to happen. And so we really wanted to put something together that was organized and somebody could actually learn the whole process, not over lunch, right? And the second reason was we wanted to work with people that are serious because we want to partner with people. We want to do deals with people. But we want to work with people that are serious and someone's willing to pay for coaching, they're going to be serious. And so we wanted those people in our program. It's like, hey, yes, let's partner together and do a deal. Are you serious? Because I don't want to spend a whole lot of time teaching you this. And then, you fall off and I don't hear from you again because that's frustrating. So we really started because of that. And it's been going well. If you're interested in any more information, you can go to apartmenteducators.com. And there's some free courses on there. All of our webinars are on there. They're all free. We give out a lot of free content. And if you're interested in the programs, you can get some information there. Or you can set up a call with me as well, and we can talk about that. Love to chat about that. And then the commercial brokerage, it's called Accelerated Commercial Real Estate. I think the website is acceleratedcre.com. And if you're interested in any multifamily properties in Texas, Emily's our broker. She can help you out and try to find. Everyone's trying to get in Texas. So we have a lot of buyers and not a lot of deals that are working, but we're able to find some. She's found a few off-market deals, true off-market deals like direct to seller that have been pretty good. So if you're interested in Texas, call Emily and she'd be glad to help you out.
That's awesome. Well, Ruben, thank you so much for sharing so much of your knowledge and your time tonight with us. It's an honor to have you on. And again, thank you for everything that you're doing right now.
Yeah, I really appreciate you guys inviting me out. And it was great to talk to both of you. And hopefully this won't be the end. We can continue chatting and hopefully see each other soon.
Of course, absolutely it will. And for you listeners out there, please like and subscribe wherever you're listening or watching this video and audio podcast. We would really appreciate that so that we can go up the algorithm and get more views to more people, and so that we can share the Ruben Dominguez of the world and spread their light more to more and more people. So we really appreciate your support, you guys. Feel free to like and comment it, subscribe if you enjoy the content. We really appreciate it. And if you guys want to find out more about what Sophie and I do, please visit elevateequity.org. But don't want to take anything away from Ruben because his stuff is fantastic. It's amazing. Talked with him for a long time. He's a great guy, and you're going to learn a lot. So thank you guys so much for listening, and have a fantastic night and enjoy whatever it is that you're doing in life. This is Derek.
And this is Sophie.
Signing off. Take care.